The benchmark index, after making a high of 377 points, closed down at 33,848 points, marking a day-on-day decline of 0.5%, followed by a month-to-date decline of 0.6%. Pressure built up at the last moment on the back of political news concerning BNPM's, BNP meaning Balochistan National Party, BNPM's withdrawal from its alliance with the federal government. Additionally, foreigners turned net sellers as the foreign portfolio recorded net outflows worth USD 2.5 million versus net outflows worth USD 1.6 million reported yesterday, taking cumulative 2-day foreign outflow to USD 4.1 million. Having a look at the major contributors to today's day-on-day decline, within the banking sector, the top three giants, namely UBL, MCB, and HBL, marked day-on-day declines of 2.1%, 2.9%, and 0.9% respectively. Within the oil and gas exploration sector, Pak Oil Fields and Murray Petroleum marked day-on-day declines of 0.6% and 1.1% respectively. Other blue-chip stocks that portrayed a bearish trend included FFC, Fauji Fertilizer Company, and Engro Corporation that marked a decline of 1% and 1.3% respectively. Looking ahead, Dollars and Cents would recommend that you buy on dips or that you start selling on any signs of strength. And if you're looking to buy, make sure you deploy your savings into blue chip stocks at the moment. Do not even make the mistake of going for speculative stocks such as Spark Electron or Hum Network. Stay away from these kind of stocks. Make sure that you deploy your savings into blue chip stocks. Go for MCB, go for HBL. Fauji Fertilizer is a good stock if you want to earn dividends. They pay dividends on a quarterly basis. MCB pays dividend every quarter. UBL pays dividends every quarter, and as does HBL. Let's switch gears and have a look at what's happened in the regional markets. Within the regional markets, the Philippine Stock Exchange Index portrayed a muted growth. It rose by less than a point. Kuala Lumpur Composite Index up by 0.6%, Taiwan Stock Exchange up by 0.2%, Korean Stock Price Index up by 14 basis points, Shanghai Stock Exchange up by 0.14%, Bombay Stock Exchange down by 0.3%, in line with the decline witnessed in the Karachi Stock Exchange, and the Indonesian Jakarta Exchange also marked a muted growth day over day. Do not take the greens as any signs of improvement, because there are still signs of a second wave of COVID pandemic, which could easily invalidate all the optimism and could very well turn the tide. With respect to the COVID-19 situation in Pakistan, the number of confirmed cases are just south of 155,000. Cases that have gone up in the previous 24 hours are just north of 5,800. Number of deaths that have been reported in the previous 24 hours are at 136 versus 97 reported previously. Recoveries have managed to show an uptrend in the past 24 hours as they've been reported just south of 2,000. If the general public does start taking these precautions seriously, the number of cases reported on a daily basis could very well scale down. With that said, the premature easing of the lockdown has left a thicker mist of uncertainty than ever before. Moving ahead, jumping into the FX market, we would see that the rupee closed at 165.7 against the dollar, marking a decline of 0.5% day over day and a month-to-date decline of 1.6%. On the remittances front, despite the current economic downturn, Remittances flows during May portrayed an uptrend as flows for May came in at USD 1.9 billion versus USD 1.8 billion reported in the previous month, depicting a growth of 4.6% month over month. The improved remittances flows were as a result of recovery in inflows from the UK, the USA, and Oman, while UAE and Saudi Arabia marked a month-over-month decline. Amid the current slowdown, it is safe to assume that remittances will remain under pressure or will remain sluggish in the coming months. With regards to the 10-year US Treasury yields, the 10-year US Treasuries began the year at a high of 1.92 at December 19 end. However, owing to the widespread of the pandemic and FED's emergency rate cuts in an attempt to spur economic growth, the 10-year US Treasury yield curve declined to close at 0.7% in March and has remained range-bound since to close at 0.75 at 16 June. Gold, which is often used as a safe store of value during times of political and financial uncertainty, closed at USD 1723.2 per ounce, easing by 0.2% day over day, owing to the strengthening US dollar and hopes of a potential COVID 19 drug. However, the expected surge in COVID 19 cases provided some cushion to spot gold. Switching gears and moving to crude oil prices fell on Wednesday, supported by the prospect of oversupply as a potential second wave of coronavirus pandemic threatened to halt any recovery of demand, where WTI crude closed at 37.7 per barrel, a day-on-day decline of 1.5%. Brent crude closed at 40.5 per barrel, a day-on-day decline of 1.2%. That's it for today. If you found the information useful, be sure to share it, spread the education, subscribe, and hit the bell icon to stay updated with the recent developments in the global as well as domestic economy. See you all in the next one. Thank you for your time.